Have you ever looked at a trading chart and thought, what in the world is going on here? All these candles, indicators, line can really make the market feel like a mess. But what if I told you there is a simpler way to trade? A way that stripes out all the noise and focuses purely on what price is actually doing. This is where price action comes in. It is a clean method used by professional traders. There is no magic formulas, there is no complicated indicators that lag, but just pure action. And the best part is, you don't need to be an expert to start. In this guide, we are going to break down the basic price action tips and technique ways how professional traders trade, how we do trade. Actually, the BYBT strategy is going to be laid down on this YouTube channel. So make sure you subscribe, turn on that notification bell, and also leave a comment. Where are you watching from? Which strategy are you currently using? So let's dive into the video. Yes, so price action. First things first. What is price action? As you hear action, action means like those you people that like movies. Action, an action movie. So when you're talking about price action, we are looking at how sellers and buyers are actually battling, either for the market to go on the seller's side or the market to go on the buyer's side. So if you really want to read the charts like a pro, you need to first understand what we call market structure. So you are going to be dropping these videos on a weekly basis, and you're going to be concentrating very much on price action. We are going to teach you on how to read the price, how to find the entries, how to interpret every single thing. So make sure you follow these videos. Each episode that comes out, make sure you turn on that notification bell. Always. So price action, we have said, this is what price actually does. This is what price actually does. So we have said that if you want to look at what price action means, you need to know what we call market structure. Then, what is market structure? So, for market structure, we are looking at how the market actually moves. What is market structure? How actually the market moves. And you will agree with me, or you will agree with me, you cannot talk about market structure without actually meaning the trend. What is the trend of the market? How is the market moving? The trend. So we are going to start with our market structure to understand price action. Then we shall look at the candlesticks and so on and so forth. So when you talk about market structure, we are looking at how trends are formed. We know that we have three types of trends. We have the uptrend, which is commonly also known as the bullish trend, which is also commonly known as the buying trend. So if somebody comes and tells you what is the trend, and you tell them it is a bullish trend, it is an uptrend, it is a buying trend, all these names are meaning the same. We also have what we call the ranging market, or you can call it consolidation, where the market is consolidating or the market is moving sideways. Remember, we are looking at price action. What price does? Price is either going to be moving up. If it is not moving up, then it is going to be ranging. If it is not ranging or consolidating, it is going to be moving down. That means it is in a down trend. Remember, we said that we are going to simplify for you these things as much as we can. We have to make money this year. Remember, the motto is enough is enough. Enough with borrowing accounts. Enough with using indicators. Enough with buying signals. You see? So, downtrend, same as selling trend, or bearish trend. So same thing, as a person says we are in a bearish trend, they are meaning that the market is actually selling. So we are going to look at the uptrend first. How does really the uptrend come about? How does it actually start? We have to understand price action. How does actually price? We are going to be looking at candle by candle. So when we look at the buyers, okay, when we look at the buyers, the buying trend, we are going to see that the market is going to be moving in this form. It is going to move up, come down, up, down, up. So these movements have names, different names. We can call this move from this point to this point an impulse. This is an impulsive move. Then we are calling this move that comes back down a pullback, or a retest, or a retracement. There are very many names out there actually. If you're a trader that is actually looking at theories most, every trader is going to come out with a theory. You're going to hear very many words. Somebody can come and say this move is called anything he wants. He can call it his name. So you're going to get confused and you're like, what the hell is this? I don't know this. You're going to find that you actually also know how to trade already, but because you're confused by the names that you see on different platforms. So we are keeping things simple and things that everybody can simply understand. You know, you people think that the harder you make things, the harder you make your trading, the more you're going to make money. No, the simpler you keep your trading, it is the money you're going to make. So let's keep things simple. So this is an impulse. This is a pullback, an impulse, a pullback, an impulse. So the market in the process of making an impulse, that means the buying pressure here is much than the selling pressure. Okay? So when I'm trying to represent this, I know most of you are well conversant with the candlestick charts. But let's take this as a line chart. So this line is representing, I am simply representing, okay, let me delete this. When I do a line like this, okay, it is the same thing as me drawing my candlesticks, okay, to the upside. Though the candlesticks will always take a lot of time, so I'm going to be choosing to use a line graph. So bear with me so that we do enjoy the lessons. Okay, we do enjoy the lessons. Remember, we are fighting poverty. So when I draw something like this, okay, it is the same thing as drawing a line to represent that the candles we are buying. Then when it comes back down, the market is retesting. So when you go to our chart simply here, this is what I mean. When I draw a line like this, so I represent all these candles with just a line like this. So it has went up, that is an impulse, retested, went up again, retested somewhere, went up again. Hope I don't want anybody to get confused because I want you to understand. So we are still on our uptrend. How the uptrend is formed: impulse, pullback, impulse, pullback, impulse. So in the process of forming impulses and pullbacks, the market is going to come from a low point, then it hits a high point. Now this is where higher highs and higher lows comes in. So this point is called a high, then this point is called a higher low. Why is it called a higher low? It is called a higher low because this point is high than this previous point. So the market has created a higher low. We expect it to create a new higher high. Why do you call this a higher high? Because this point here is higher than this previous point. So it is called a higher high. This concept is going to help us in the near future to find take profits and stop losses, higher highs and lower lows. So higher highs, higher lows. That is where you see telling a trader telling you that never enter on an impulse. Why? Because here already the buying pressure is a little bit, it is actually mob. So when you enter from a higher high, sometimes you're going to blow the account or you're going to make a loss and then the market goes back up. So you have to make sure that you always enter when the market is on a higher low. We are going to dive in deep on the entries, but we want to first understand how does the uptrend come about. Hope we are following at this point. So we have seen that the market creates impulses, it creates pullbacks, it creates higher highs and higher lows. So why doesn't it move at once like this? That the market goes at once, it buys. Why doesn't it do like that? This is simply because we are going to get buyers entering. If the market is on a higher low, we are getting more buyers entering. Let's say this is our low point. Okay. So if the buyers continue entering, the market is going to go up. So these buyers, most of them, why does it now come back down a bit? Some of these buyers, or even these ones that entered before, are going to take some profits. Some are going to take some profits. Remember, these trends, this is a battle between buyers and sellers. The one that wins is the one that takes the trend. So what happens here? The big investors are going to, some will take some profits. Okay, because this is business, you'll have to take profits at some point. Somebody will take profits here, another one will take here, another one will take at point B. So we are first understanding why is it moving like this. So here you enter, some are taking profits, so the buying pressure is going to decrease. And when it decreases, of course, the selling pressure will be somehow coming in. And also remember, there are people that are selling, there are people that are seeing sales. But for us, strictly price action traders, we are following the trend. We are never trading against the trend. Hope we are following. Remember, if you're still watching this video, make sure you subscribe. Leave us a like button. Leave us a like. Comment. Also, turn on the notification bell so that you don't miss the next video. Okay, so I think we are at par. We have seen where higher highs comes from, and then lower lows, and then impulses. So when we go on the real chart, how do these things really look like? Okay, how do these things look like? And remember, price action is going to be working for you on all, whatever you're trading, commodities, forex, those are the CDFs, crypto. Okay, it will all work. So when we look here, we shall say this market had an impulse, slight pullback, impulse, impulse, impulse. So we can say this market here was in an up trend, which later came to an end. We are going to see all of that in our series of videos. So how do we say that, what do we term as a higher high and a higher low? For you to say that this point is a higher high, we should have opposite candles at that point. Okay, so if we have a buying candle here, or if we have been only having or getting buy candles, okay, if you have only been getting buy candles, we want what happened to my keyboard? Sorry about that. So if the market has been buying, okay, the market has been buying in this form. So we have agreed that this is an impulse. This is an impulsive move. Okay. Then the market will make a retest. The market will make a retest in this form. Okay. So let's change the color of this other candle that is retesting. So the market is, let's say, is retesting in this form. Okay. Then we expect the market to go back because we are in an uptrend. We are in an uptrend. So we are putting back our color to white. That is a buy candle. So the market is buying once again. All right. So we want to identify the higher highs and higher lows. So everywhere we see opposite candles, now like here, we have a sell candle and then a buy candle. This is a zone, or this is a high, a higher low, and this is a higher high. So for you to term a point as it is having a higher high or a higher low, there has to be opposite candle. We cannot say that this is a higher high. No, because it is still one candle. Though this candle has its high point, which is a high of that candle. Hope I'm not confusing you. But for us, when we are using price action, we want to see, for us to consider a higher high, there has to be opposite candles. Okay, opposite, that means a buy and a sell, or a sell and a buy, depending on the trend you're in. So when we look here, we shall say this was a higher low. Then we have had a very big impulse here. Okay, that means buyers had pressure here that took the market up. Then the market has created a higher high. Why is it a higher high? It is higher than this previous high here. But this higher high was also once higher than the previous highs. So this is how these points are coming about. You understand? So remember, we said that we are only gonna look for entries when the market is on higher lows, not on higher highs. That's if the market is buying. We are going to see the other trends also. Each and every trend is going to be in a new video. Okay, so hope you've enjoyed this first episode of understanding price action. Make sure you leave us a comment on what strategy you're using, and also on how best can we help you understand and do make money. So see you in the next video. Remember to subscribe. Next video we shall be talking about the downtrend and then the other trends. We shall be combining all these lessons at the end all together to find entries and also be your best traders. See you in the next one. We are out.